very, very explosive. Very extremely explosive.
Welcome back to your Smart Money Source. This video is going to be a very special video because I have a great guest, which is Barrett Wave, one of the educators in the BBS Academy. And we are going to talk about how and if it is possible to blend Elliot waves with smart money concepts and Wyckoff as well. Make sure to check the link in the description to learn Elliot waves and smart money with us. Now jumping into the chart, we are going to analyze how Barrett predicted a $2,000 moves on the NASDAQ. He posted this video on March 8th and now he's going to explain in detail how he managed to predict this beautiful and big move. So go ahead, Barrett.
Hello everybody, this is Barrett. Thank you guys for the introduction. Well, let's jump right into the chart. So as you guys know, this is NASDAQ. Why was I thinking that we were resuming to the upside, even though look at this, guys. A massive retracement. It's a 12% sell off on the NASDAQ. So why wasn't I thinking that we were crashing? Well, in the L wave world, when we see a pullback in 3 waves and not 5, we know that we're still going to go to the upside. We're still going to continue higher. In addition to that, well, also we know in the L wave world, and this is why I think L wave is one of the most powerful strategy out there, is that correction of the same degree will tend toward equality in both time and magnitude. So now time means left to right and magnitude price, so up and down. So if we measure how deep was wave 2 and we compare it to the wave 4, which is the correction of the same degree, you can see the same color and same degree. This is called primary degree. You see how it's 100%, which means it's as long as wave 2. So that gave me even additional confidence to know that we were going to resume to the upside. And guess what? Well, I guess we really did resume to the upside.
That was a great explanation, Barrett. You can see how Elliot waves allows you to see big swings forming in the chart, and you can anticipate where that swing is going to end and where the next big swing is going to happen. We are talking about the daily chart, guys, here, and this move was not a small move, was a move of about $2,000. So now let's see the same exact chart. How can we analyze using smart money concepts and Wyckoff, and how we could have taken advantage of this beautiful analysis. So obviously, starting from the daily chart, we can clearly see a price is making higher highs and higher lows. What this means is that smart money is reaccumulating and expanding to the upside over and over again, capturing external liquidity and then to internal liquidity. So here we can see we have an accumulation, a reaccumulation rather. We have a nice break or market structure indicating that price was ready to go higher. So basically the origin of this break or market structure was all this move to a downside. This move represents an order book that grabs liquidity below some old lows before pushing higher. So knowing that price is now coming back during the backup of a reaccumulation, we know that that will happen around the higher boundaries of the trend range of any given Wyckoff reaccumulation. Basically, we expect price to bounce around these areas. Let's say that we want to take a trade based on this. What we can do is wait for price to get to our point of interest, which in this case is this one mixed with this bigger order book. And once price gets to this level, we can go onto lower time frames and see if we have any kind of break or market structure. So if we do the replay mode here, so we don't get lost, when price was approaching this level, we can see that we have some kind of redistribution here, price basically attacking the highs over and over again. We know that this is a redistribution, so once price breaks, we anticipate price to continue going lower. But at one moment, when price broke to a downside, it built a normal accumulation. We can see a price started attacking the lows, creating equal lows here. We have a sign of strength when price attempts to go higher, basically a bullish intention. And after the final spring that grabs liquidity below the equal lows, we can see that we finally have a break or market structure. After this very first break or market structure that happened here, we have to ask ourselves, which is the origin of this break or market structure that is happening framed around a higher time frame point of interest. And we can see that the last push to the downside that grabbed liquidity before going higher was this one. So this is now our main order book where we can frame a trade idea from. So we could just simply had open and long from here with a stop loss there. The target is not going to be a short-term high, no, because we are talking about coming from a higher time frame level, meaning that price has the potential to reach this high here. We got to hit 7.69 hour, and we are not even going deeper into the 5 minutes, 1 minute, or even lower time frames. So you can see the potential of knowing Elliot waves to anticipate a lot of these bigger moves, and then going and framing setup on lower time frames using Smart Money and Wyckoff, or even Elliot waves as well, because Elliot waves can be applied on lower time frames. Now let's talk about another beautiful prediction Barrett managed to make using Elliot waves. This prediction is from the DAX. As you can see, he posts a lot of updates on different trades and different analysis that we have on using Elliot waves. Here is the chart that he sent in the Academy, and as you can see, price from here, which is 14,400, blasted off for about 1,000 euros. So now Barry, go ahead and explain us how did you manage to predict this move?
Thanks again, Augusto. Well, let's talk about the DAX now. Well, as you guys can see, what the DAX did was very similar to what the NASDAQ did. Once again, if we measure the length of wave 2 and then we project it to compare it to the length of wave 4 of the same degree, so once again, correction of the same degree will tend toward equality in length. We can see how that's equality, that's 1. So it was precisely as long as wave 2. Not only that, we also know that in the L wave world, we use a channeling technique, which means we take the parallel channel from wave 1 to 3 and then project it to 2. And that is our estimate for wave 4. Now, what you may think is that we did break. However, this is one of the very usual fake outs you see in trading when a channel is broken and then not successfully retested, but it enters once again in the channel. So to sum up, we use our golden box to see where price could bounce off from.
That was a great explanation, Barry. Thank you very much. And now let's see how we can apply smart money concepts in confluence with Elliot waves. According to Elliot waves, we had a wave 4 coming and it was anticipating a move much higher. So looking at the market structure here, we obviously are on a bullish trend. The most recent break on market structure before this massive move to the upside was this one. And we have to ask again, where is the region of this break? Down here we have an order block. So we know that smart money is going to come back, grab liquidity internally below these lows, and mitigate the orders that smart money hedged shorts and longs inside of this area. And when price was approaching to this level, we can already see how we have a nice reaccumulation, price attacking the lows over and over again, building liquidity on the sell side, creating equal lows. And when this final move happened, coming back into a very discount level of this order book, we could have anticipated a move to the upside as price is now grabbing and engineering sell side liquidity. And these sellers are going to be placing a stop loss below each one of these highs, which will in the end help price push much higher, because the stop loss of a short is obviously a long. So every time price is breaking a high, is allowing price to push much higher with an ease. And now here we have another banger from Barrett, which is a Tesla long that he took and he shared to the BBS Academy. As we can see, he was predicting Tesla to make a move to the upside to around 780. And now if we look at the chart, this was the March the 31. Tesla moved for about 22% in a matter of 14 days. So imagine taking this trade on an options account or on any account basically, because 22% in a few days is insane. So Barry, please, can you explain us what did you see here in terms of Elliot waves?
Thanks, Augusto. So I'll make it very easy for you guys to understand. In the L wave world, once we have 3 ways to the upside and 3 ways to the downside after that, we know that we are due either 3 or 5 ways to the upside again. So in a kind of a way, we couldn't be certain 100% because, guys, remember, this is trading. We're never 100% sure, but we were pretty confident using our Elliot wave that we were going to see the upside to come. In addition to that, we also have an Elliot wave diagonal, which is a very common reversal pattern in the Elliot wave world, and I also cover it in one of my videos. Go check it out if you want, guys. And remember, guys, we couldn't miss the golden box. And guess what? Once it entered, it just bounced it up. We saw a reaction to the upside, which was very, very explosive. Very extremely explosive.
Very extremely super explosive. So how can we blend Elliot wave and smart money together? And do these strategy words together separately? Are both the same with different words? Let's quickly address how the Elliot wave world works and how the same can be seen using smart money concepts. So go ahead, Barrett.
Yeah, thanks, Gus. So let's dig into some basics of the theory that you guys need to know. Well, as you can see here from the chart, you have 5 ways up and 3 ways down. Now, we have 3 main rules in the Elliott wave world. The first one is that wave 2 cannot retrace past the starting point of wave 1, meaning that wave 2 cannot go below this low. In this case, of course, we are in a bullish market. So wave 1, 3, and 5 are to the upside, and the ABC is to the downside. The rule number 2 is that wave 3 cannot be the shortest. It doesn't mean that it has to be the longest. It just means that it cannot be the shortest. Last but not least is that wave 4 cannot overlap with the starting point of wave 1. And of course, as you can see, guys, after that, you have an ABC correction, which is in 3 wave. What happens after that? Well, in a bullish market, the trend resumes to the upside. Because of the nature of Elliot, we know that every impulse wave and impulse waves are wave 1, 3, and 5 will have 5 subwaves. So wave 1 will have 5 subwaves, wave 3 will have 5 subwaves, and also will wave 5. Wave 2 and 4 will have 3 subwaves, an A, B, C correction. So guys, that's the really basics you need to know about Elliott wave. Go check out the video on my channel where I go over some additional knowledge that you guys need to know in order to master Elliott wave.
So what do we see here in terms of smart money? Price is simply accumulating orders here, breaking the structure to the upside, reaccumulating again, breaking the structure to the upside, and now distributing. Basically, smart money will always look for new and important levels of liquidity where they can start taking profits from the original accumulation. So let's say that we have an all equal high here, maybe on the same time frame as this example. So price won't stop going higher until it hits this level, because above this level there are going to be sell stops that will allow smart money to start taking profits from these longs. So after taking profit from these longs, if they have higher targets to be met, this is what happens when we finish the wave C. Basically, we start a new uptrend. And where will the new uptrend start from? From the origin of all this move up. And where is the origin? Obviously, inside of the order block, that could be this one, or maybe an order block that we have here to the left. So in all, both strategies are profitable and they tend to see the market in the proper way. We are going to be able to predict most of the moves that are happening within any market. That's all for this video, guys. Thank you very much for watching. Don't forget to check out Barrett Wave. I'm going to leave the link in the description, and see you guys in the next video.